All right, guys, so we got Kou Success Lee Fx here, Trading Up podcast. We've jumped on YouTube to basically go through some of the stuff he talked about in the show, and also to I suppose go through a few other things as well. So, Kou, over to you. We're going to talk about Bitcoin, and you were talking about where we might get in at the 5,000 level again, and you had some lines on the chart. So let's go over that to start off with.
Let's do it. Ultimately, this price has been consolidating down here from 4,200, and what I'm outlining is every time it hits 4,200, it bounce down. Say previously here, and same thing here. So that's 4 times that it retested this 4,200 price. And this is on the daily chart here on TradingView, and I marked this horizontal line down here at 32.86 because this was the lowest price that was targeted. Was it? Yeah, pretty much at the beginning of January of this year. Now, with the trend line that I drew out, really holds a strong point. And if it actually does break the 4,200 and closes above, but the most important thing is to break above this trend line and stay at this 5,000. There's no more, like I said here, there's no resistance until we come back to the 6,500 price based on the daily. So that's why the key price for me to reconsider buying would be 5,000. And just because these candles here are closing, like these two are closing above the trend line, that doesn't mean that it's a solid confirmation of buying. So you always have to be very careful, especially when using the trend line, to where you want to mark up where the next buying confirmation is. So once, like I said, once it attempts 4,200 again, and it breaks 4,200 and closes above 4,200, that's just the first set of resistance to break. And then after that, this 5,000 price was where I wanted to break and stay above as a bullish engulfing candle. That is what I'm looking for a breakout. Breaking out, closing as a really strong bullish engulfing candle outside of it to let you know that the bulls are back in control.
Right. Nice. So, okay. So we're at this point now where I suppose Bitcoin could go for a bit of a run, at least up to 5,000.
Right. The question is, when is that going to happen?
Yeah. And so would you wait? You wouldn't wait for it to retest the trend line?
I do. Well, I'm not trading no more, but when Bitcoin hit 3,200, I did a couple orders on Coinbase to buy some crypto at that time. And so now, I mean, it's not like something crazy where I'm throwing like 15, 20,000. I'm not wasting my money putting it onto Bitcoin. The most important thing is, who is the next biggest coin to invest in? What is the next biggest coin? It could be Ethereum. That's what everybody's talking about. Or it could be Ripple, because Ripple is the 3rd largest coin. And it's only capped at 31 cents right now. So
it's funny because that sort of correlates to what the conspiracy theorists who are on the show have got to say about it. It's like there's going to be a coin that goes, and it's not going to be Bitcoin. It's going to be the one that everyone else owns, the one the empire owns. So you're sort of saying exactly the same thing, but in a different way, which is quite interesting.
Yeah, I mean, if you look at all the small coins that are coming in right now, something's gonna take advantage of it, of the price. And wherever the investors are going into, you got to be ready when they put that money in there, and it's gonna run, and it's not gonna stop, just like Bitcoin. But Bitcoin already had its run, and why would anybody want to put Bitcoin back to 20,000? Even if it does come back to 20,000, it's gonna be a long time. Everyone wants to make that kind of money. When people bought Bitcoin, whoever bought Bitcoin back in 2009 at whatever, so was it like 10 cents? So
yeah,
that's the biggest thing right now, is what is the next coin that's going to take over and run. So
So are there some other charts you could perhaps like walk us through on here?
Sure. I'll go back to currency here. So like I was talking about, let's run into, yeah, my favorite pair, USDJPY. So let's run to the 15-minute chart. And what I want to outline here.
Yeah, sure. I took a good trade on this pair yesterday, funnily enough.
Yeah, I did.
Which is quite odd. So I'd be interested to see how you approach it.
Yeah. So based on the 15-minute chart, now what I'm outlining is where price was bought and sold. Now, so the highest price was 111, came all the way up, pretty much all the way to 111.9, and then it got shot back down, all the way back down to 111.4. Same thing. How price was, how this shot up, get back down. So you have pretty much a 40 pip gap here. I'm not going to move these lines, but I'm going to hop into the 1 hour. Your 1 hour and your 15-minute is really important how they all connect. Notice that this connects here, here, and here. You got 3 points of how price was bought off of and bounced off. That's the most important thing. If we were to highlight this high price, this also was another rejection right here again. Very important how price got rejected here again. And the reason why I would be looking to sell the dollar to the yen is because it already got rejected the third time.
Right.
In here, pull back, rejected the rejection on the second time. Anytime it gets rejected on the second time, you have to be ready for that major fall, especially on resistance. It's not the first time. It's always the second time.
Yeah.
Very rare does it create like a triple top.
So that third one there was highly unlikely.
Right. So when
because that's essentially, that was my trade, the third one.
On the sell?
Yeah.
Yeah. So what I'm looking for, I wouldn't be looking at the 1 hour anymore, because the week, every time, like I said, every time Friday closes, I will look at the weekly. And now, if you look at the weekly, you can see how many times price was rejected, multiple times here at 113. So I don't care about the bulls pushing this back up. This week's candle did not break resistance, did not break this price here, end up closing below it. I'll be looking for it to short it back down. We don't have any support until we come back here, and based on the weekly support. These candles, I do not count support, because there's no two candles creating support.
See, yeah.
So when you look at swinging on a higher time frame, like the weekly, now you get to see an overall structure of candles where previous price was rejected multiple times, especially at 113 here, and has never came back to retest 113 ever since it fell last year. You can see that the last year of 2018, it's been rejected multiple times at 113. That's how I lost my money, because I didn't understand what, the overall structure of candles, especially looking at the higher time frames.
And how easy do you think it is for somebody to sort of get to that level of discretion that you've got here? Because I would call it sort of, it's quite discretionary, right? So it's like,
it's a
somebody else is going to see it differently, and it's
it's like I said, if you take the time to read what candlestick patterns are, and you start slowly looking at candlesticks, and you start nitpicking, start being a little bit more specific on targeting what candles you want to look for, when you start looking at specific candlestick structures or candlestick patterns or just one candle, you can start building your own confirmations and the confidence behind that. And then then you start working towards more candlesticks. I look at candlesticks and then I would tie the price in to see where price would be driven based on, the previous set of candles. So if I'm looking at the weekly chart, I'm looking at what happened, what happened this whole week and what happened last week. Well, obviously last week, it tried to come back up here, but you can see it got sent back down at the end of Friday. And so it came up there to retest resistance, but it never went to break resistance. If it's not going to break it, they're going to send it back down. And that means that you have to be ready for them to short it back down. You can't just expect this because it's just a bull. You can't expect this bull candle, this weekly bull candle that closed out like this and say, oh, well, the bull markets are still, because my green candles are bull candles.
Yeah.
You can't expect that and say, the bulls are going to come back. And
it's funny. So I suppose, and that's where I got tripped up way back in the day was like, so for example, one of the doji sort of / hammer candles, maybe the one on just above May, the red one there, that like, it's like, oh, it's a hammer. It's an inverted hammer. Just a bit further along above May, that line next to May on the left-hand side of it last year. Yeah, keep going left. Keep going left.
This one?
No, the other way. Keep going. No, the wrong way. May.
Oh.
May. No, you've gone too far. This is going to be difficult. No, but May, if you look at the date, yeah, and keep going. That one there, that one there. Yeah. So say if you go, going, it's an inverted hammer, although really it's the doji. Either way, you're sort of looking for it to, if you didn't know the next candle was coming, you could easily go, well, if I went literally just looking at the candle without anything else, you might be going, well, that's going south, right? But there's other things to take into context, which I think if you don't take everything into context, then it's just stuff just doesn't work, right? And you struggle.
It gets tricky when you look at doji candles, but if you approach this, if I was to approach this before, I would still buy it. You can see this little doji candle is still above this this bull candle here.
Yeah.
Just slightly above it. I mean, it's not enough to say that you would keep buying it, but if you're really not for sure, based on looking at this weekly candle, you can always never go wrong. Jump down to the daily and say, what did the daily candle look like? So I can see exactly how the structure was all set up.
Yeah.
That way you're not getting too confused looking at the monthly candle, at the weekly candle, by just looking at, it's just a doji candle, so I would just sell it. So when there's too much doji candles being formed on the weekly, then you have to take yourself and step back down to the daily and the 4-hour, so you can see some kind of movement and see where these 4-hour candles or where the daily candles are going to create that weekly candle at the end of Friday. That's the most important thing.
Mm. And I think, and that's the hardest thing for people starting out, and even people that aren't starting out that have been doing it for ages, is doing that higher time frame analysis,
right?
Higher time frames, working it out, and even getting out of the lower time frames to a certain degree.
Right.
It's taken me years to get there. I think I'm finally there, which is good.
I hope, like I said, my goal is to simplify as much as I can of my level of trading to anybody. So.
Yeah, well, that's the other thing I sort of thought the other day, and it's sort of you reiterated it in the podcast a bit, which was like and somebody else has said it as well. It's like it's not about how many hours you can get in front of the charts. If you can get less hours in front of the charts and spend less time trading, then that's the goal, right?
That is the goal. The goal is to make full-time income of trading. I'm just trading part-time. That's the goal.
Yeah, exactly. So if you're doing like 12 hours on the charts a day, you might be better off in a job. I mean, you might be, and if you're making a salary that's equivalent, you might be better off doing 8 hours at a job and a 1 hour commute each way. You've saved yourself 2 hours. Not that you should be spending 12 hours at a chart. But anyway, now, is there anything else you can tell us before we wrap up here, or should we just leave it there? And if the guys want to, what's the best way for the guys to get hold of you?
I have a lot of people message me on Telegram because I have a paid group there, and then email, my Gmail, you can always get my email. And then if not, I have a Facebook page about my services and everything is all there. Website has contact information. If not, I mean, YouTube is always there. I'm always constantly looking at my YouTube. So.
Brilliant. Well, we'll put a link to your show notes under this video as well. So guys, if you want to go and hear the podcast, then we've got an hour of audio masterclass there for you to sink your teeth into and find out how this guy does what he does and the backstory and everything. So look, thanks very much for coming on the show. It's been a pleasure and lovely to have you. And the stuff that you've shared has been fantastic. So I know the guys are going to love listening to the show once they've seen this video, or if you're going the other way around, you'll probably want to listen to it on repeat. Thanks, mate. It's been brilliant having you on the show.
Sounds good, Cam. Catch you next time.